One of the things by far that has helped me the most during my investing journey has been learning to think and react radically different than the average investor. It's an investing fundamental that has made me over $1 million, and I'm not the only one. Warren Buffett, maybe the most successful investor of all time, is famous for saying, "It is wise for investors to be fearful when others are greedy, and greedy when others are fearful." As in, it's wise to think and react differently than the rest of the market. Nathan Rothschild, member of the Rothschild banking family, is credited with saying, "The time to buy is when there's blood in the streets." AKA when people are fearful, everything's falling apart, the markets are red, everyone's running for cover, that's when there's the greatest opportunity. When everyone else is so fearful, they're not even looking for opportunity. And I've personally found this to be true. The best opportunities are when everyone else decides to leave, and your risk is at its highest when everyone's buying. For example, Michael Burry, as famously depicted by Christian Bale in the movie The Big Short, is famous for thinking and responding radically different than everyone else. Michael saw that the real estate market was going to collapse due to the way that subprime mortgages were being handled, when everyone else said and believed it would just continue to go up. He then convinced multiple different firms to let him short the market, which they thought was absolutely insane. Eventually though, he was proven right and made a profit of $100 million and $600 million for the investors in his fund. While the entire rest of the market was saying prices were just going to go up, he looked at the situation differently and saw what no one else could see because nobody else was even looking. And he won big because he went against the grain. And the people who lost the biggest were the ones who were buying houses when the entire market was at the height of its popularity. Another example, after the 2017 bull run, the crypto market collapsed into a deep crypto winter, where Bitcoin went from almost $20,000 down to almost $3,000. People were selling their Bitcoin at $15,000, $10,000, and $7,000, and people were selling their Ethereum at $88. During that time, there was no crowds talking about how great crypto was. If the media was talking about crypto, it was generally negative about how crypto was going to zero or how new regulation would kill the crypto market. Very few people were investing, and the majority of people weren't paying attention at all to what was going on in the crypto market. But we know from having the benefit of hindsight that buying Bitcoin at $3,000 or buying Ethereum at $88 was the opportunity of a lifetime. During this winter, you could have bought BNB for $8, which during the next bull run, BNB reached $650 at its height. You could have bought Solana at 50 cents, which Solana reached $258 at its height. You could have bought Polygon at less than half a cent, which it reached $2.87 at its height. And you could have bought Chainlink at 17 cents, which it reached $52 at its height. Clearly, those who thought differently and went against the grain and started buying projects during crypto winter were the ones who ended up making a fortune. By contrast, those who bought at the height of crypto's popularity in 2017, when everyone was talking about crypto, when the media was talking about how great crypto was, when your mom, your neighbor, and all your friends were telling you to buy crypto because it was the opportunity of a lifetime, were the ones who ended up taking the biggest losses and losing the majority of their investment. Another example, during 2020, when COVID lockdowns happened, the stock market plummeted. People were super fearful, nobody was buying, and everyone was afraid it would go lower. I had a friend though who's a financial advisor, and he's a big believer in thinking differently. He called up all his clients and told them now was not the time to sell, but now was the time to buy. Many of them though were so fearful they decided to sell anyway. But a few people listened to him. It turned out that was the market bottom. The market ended up turning around and hitting a new all-time high. Those who went against the grain and their natural emotional response ended up making a fortune, but those who followed the crowd ended up taking a loss. The problem is when you invest only when everyone's telling you to buy, you're investing in something that's already gone up a lot in price and has a lot more downside risk than it does upside potential. However, when you invest before anyone's buying or when everyone's already sold, you have limited downside risk but massive upside potential if it's a good investment with strong fundamentals. The average investor though wants to invest in what's popular because it makes them feel safe knowing so many other people are investing at the same time and knowing so many other people are talking about it. The average investor also tends to have the same emotional reaction to market events that everyone else tends to have. When the markets start going up really fast, they get greedy and start investing in the space. When the markets plummet really fast and really far, they get fearful careful, sell everything, and leave. So in general, there's this huge swath of investors who all behave in line with each other because they're all reacting to the market in the exact same way. And for me, when the market is yelling, buy, 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 I tend to want to sell because it makes me nervous. There's so many people who think this investment will only go up. In my experience, the majority is usually wrong. After all, the majority of the market doesn't end up millionaires. It's the outliers who do. And when the majority of the market is yelling sell, 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 when they're saying that an asset class is dead and it's going to zero, I tend to view that as a potential opportunity. And if I see strong fundamentals for that asset, then I buy like crazy despite what the rest of the market is saying. Again, the majority of the market doesn't end up millionaires. The outliers do. I once read about a guy whose strategy for investing was to go to a fast-growing city, buy up all the land a few miles outside city limits, and then wait 5 years. He'd make a fortune investing into land that nobody wanted and nobody cared about because that land had strong fundamentals and he knew in the future it could be incredibly valuable. The ones who ended up making fortunes in Bitcoin were the ones buying it in 2010 when the rest of the market wasn't paying attention or was just calling it worthless. Not the ones who bought when the media was praising Bitcoin and everyone was saying to buy. And even right now, the crypto market is down and you see a lot of people who a year ago were saying, man, I wish I was lucky enough to invest in crypto during the bear market. And those same people are saying now, oh no, crypto's going into a bear market. I'm selling everything. It obviously doesn't make sense. It obviously isn't logical, but you have to realize that people aren't logical all the time. They're contradictory at times, and the average investor doesn't know how to control their emotions, and they get led and swept up by their emotions and by their fears. But for those of us who are able to control our emotions, who are constantly learning, we have the opportunity to be smarter and gain a massive advantage over the rest of the market by being the outliers and going against the grain. And as always, none of this is specific investment advice for you. This is just meant to be educational, sharing the different things that I've learned about investing during my own journey. If this video is helpful, make sure to hit that like button. If you have any questions or comments or anything to add, let me know in the comments down below. And if you want to see more videos like this, make sure you hit that subscribe button, but you got to also hit the little bell next to it to actually be notified each time I release a video. Thanks for watching, and I'll see you next week.